Good morning, Jags. This is Fahad. Today is Tuesday, July 28th. Four things I want to discuss real quick. Let's start off with AMKR Technology. The company posted an absolutely fantastic quarter last night. Now, we provided the preview for this in chat room yesterday, a bullish preview, and I mentioned that in that preview that there has been a steady accumulation way back from February in the 6,000 open interest in the September 15 call options, and those bulls are still positioned for upside. And turns out that they're going to get paid this morning. Just to quickly cover, here is the here is the chat room, and if you go over here from yesterday, here was the bullish discussion right here. We provided the preview and everything. This stock is going to gap higher by more than 15% in pre-market. Closed at 1364, trading over $15 per share. If you look at today's first trade, really impressed by some of the commentary that's coming out. Jay put this together in the notable call outs in the AMKR Technology. The communications experienced better than expected revenues across all ecosystems and major customers. It goes on to say that regarding the third quarter outlook, while there's a macroeconomic uncertainty related to the pandemic, we are expecting Q3 revenues to grow 6.5% sequentially and 15% year over year at the midpoint of the guidance, and launch of flagship smartphones, including more 5G models where we have a strong footprint, is expected to drive this growth along with the consumer wearables. One big thing that I will point out about AMKR when I was reviewing this stock and provided the preview yesterday was that in Q1, they beat the consensus estimates. In Q2, they beat the consensus estimate. In Q3, they raised the guidance. More importantly, in each of these three quarters, this is one of only few companies that never actually deferred providing any kind of guidance. They were pretty clear about what the business conditions are. They continue to post the numbers and they continue to be better than estimates. So they never hesitated pulling the guidance like hundreds and thousands of other companies did, and they continue to keep the investors informed. So, when when the management had that kind of confidence on the business conditions, that's what they do. They come out, they want to be clear, they want to continue to communicate to the investors community. So I think the stock is deservedly higher. It's going to open at new 52-week high around $15.13 right over here. And if you look at the long-term weekly scale, this would be a major breakout. And so if anybody positioned after that earnings preview, well done. Second thing, another stock in which we also provided the bullish preview yesterday is Sherwin-Williams. This too is going to gap higher sharply, even though the equity market futures are looking to gap down. In pre-market, this is trading at $655 per share after closing at the $625 per share. And this too, if you go to the chat room, you will see that yesterday we provided the bullish preview for this as well. So if anybody positioned in this stock, they're going to get paid well. Going to get paid well on this one. So here's the bullish preview on Sherwin-Williams. We expected that the company was going to post a strong quarter. All this channel checks were pointing out for a double-digit gains from late April and beyond, and the stock was already breaking out ahead of earnings. So this thing is going to push even higher. Similarly, if I look at the first read this morning, this is a fabulous quarter. This was covered, and you can see the company posted a huge beat on EPS line, coming as 710 versus 569 estimates. The revenues beat expectations. All regions of the world and all brands categories, the company sales were better than expected. Mostly the fiscal year guidance bracketed what the street expectations are, so that was in line. But more importantly, the revenue growth is now expected to be for the full year to be flat year over year versus an estimate of a decline of 2.5%. So basically that tells me that Sherwin-Williams, whatever the impact that the company had, has basically recoup that impact from pre-COVID levels back to the same levels where it was, pre-COVID. So housing data continues to be quite strong, and this thing is now back to new 52-week high. So two of the stocks we discussed yesterday, both are pushing higher. Now, taking a turn over here, let's take a look at Roku one more time. Roku and Netflix both, actually. I'm gonna lump this discussion together, but taking a look at Roku. A couple of things that you need to keep in mind on this one. This has yet to report earnings. It will come out on August 5th, which is next week after market close. The chart has an absolutely fantastic technical setup. We pointed out that from a long-term weekly trend, if you look at this chart on a long-term weekly trend, this broke out on extremely high volume a couple of weeks ago, and then it just continued to move higher. We had call options here that we made really good money on, and then for the past 3 weeks, this has been consolidating in a very tight bull flag. And the market, whatever the market does, this thing has been actually acting resilient. Yesterday it was quite, it was rallying nicely, and then today it's going to open flat. I want to see if this thing is going to start to push through $160 resistance. And if it does, we're going to have a clean breakout from a tight bull flag formation that's going to open the door potentially all the way to new 52-week high, which means take out this 175, 176 level. So from current level of 155 to get to 175, that's another $20 move to the upside. On a percentage basis, that's about 12% and such. So I'm looking for a breakout in Roku and see if that happens today or in the next couple of days. And then we'll try to play along with it by going with call options. Now, with that said, I do want to point out the company had an interesting press release out last week on July 21st, and they basically gave a glimpse of in this press release about what has been happening to the cord cutting during the pandemic. And if you read carefully, this is a very strong potential read-through and a clue as to how the company is actually benefiting from it. In this press release, I quote, "Today, we announced findings from a national cord-cutting study, including new insights from U.S. consumers about how COVID-19 pandemic is influencing the shift to streaming. The study found the approximately 32% of U.S. households don't have a traditional pay TV subscription, while another 25% of households identified as cord shavers have cut back their services. 45% of these cord shaver households stated that they are likely to cut the cord fully in the next 6 months." This is telling you that basically the cord cutting during the time of pandemic has materially accelerated. Either lots and lots of people, households, American households are simply cutting, or they have become cord shavers. Basically, they're going down to the skinny bundles. So how does this impact the OTT players, which is Roku is one of them and Netflix is the other one as well? Well, there's another note that related to this. This comes out from Needham, in which they interviewed the CEO of the company called Real Good, REEL Good. And they talked about exactly how OTT services during this COVID-19 have been benefiting. There are 4 different kind of channel checks here, all summarized. According to Nielsen, 53% of Americans watching more shows and films on streaming services like Netflix, Hulu, etc., and 46% increase in connected devices. These are just phenomenal numbers. According to ComScore, streaming homes rose from 44 million on March 2nd to 50 million on April 6th, up 14% in 4 weeks. According to Research and Markets, global OTT streaming revenues will now grow from $104 billion in 2019 to $161 billion in 2020, up 55% year over year. And according to eMarketer, time spent with Netflix will pass 30 minutes per day in 2020, up 16% year over year, while time spent on Amazon Prime Video and Hulu will grow each by 19% year over year to 9 minutes per day. These are very, very strong metrics to keep in mind. And this is all very bullish for Netflix. Now, we had a fantastic trade in Netflix. Remember that? We were writing those call options while constantly converting them back and forth between diagonal spread and straight calls. And as a result, during this run up from 400 all the way to 550, we banked more than 270% gain in the call options. And then we exited the trade. The stock has now since then pulled back, nearly came back to the major support level, and now starting to potentially take a next leg higher. I was impressed by Netflix resilience yesterday in the market. Let's see if we get more follow through. I think we may have another trade coming in Netflix. But in short term, the one that has not reported the earnings yet is ROKU. So keep an eye on ROKU. Let's see if this thing starts to take out 160. And I think this earnings that comes out on August 5th is going to blow estimates out of water given these channel checks and the press release that the company is providing. So those are the things that I wanted to discuss. Last thing, and I'll just throw another one into this one that was just in my screen this morning that I was discussing, and we have never discussed this name. It's called First Cash, FCFS. First Cash owns pawn shops in which they basically provide these for hard to for these high risky borrowers all kinds of loans that the company in high interest loans for the needy customers, whether they're short-term loans for a day loan or a week or 2 weeks. This stock continues to get destroyed, hitting a new 52-week low yesterday after a big sell-off the prior day. From a pure technical standpoint, this is an ugly breakdown that continues. Now it's at $59 per share, new 52-week low. So just continues to come down and down. Well, I just wanted to point out that when I was reading the earnings reports from the company, there's a comment that stood out for me, which is, with the onset of COVID-19 related lockdowns of the economy and rapid federal response, pawn loan originations in the U.S. fell significantly in April, declining almost 60% for the month. Beginning in May, pawn loan originations began to slowly improve, but still down 30 to 35% in early July. So that's a read through for the third quarter. Third quarter is still going to be down so much, 30 to 35%. Resulting pawn balances at June 30th were down 40% in total on a same-store basis compared to prior year. And then the total retail sales were increased, but still the loan balances continue to decline. So I just added this first time to my watch list this morning. I need to do more homework on this one. And once I do more work, and then I will have more constructive thoughts on how to trade the stock at some point in the chat room or in the webinar. So that's it from me. Chronicle.
Morning, Fahad. So I think it was over a month ago when I talked about oil rig counts and how they correlate to the rig owners and the oil equipment stocks. And I particularly singled out Schlumberger, symbol SLB, and Halliburton, symbol HAL, as potential long-term horizon buys in anticipation of the bottoming of oil rig counts. Technically, I like SLB the most. And full disclosure, I'm currently long. I think we can revisit the recent high of around $24 in the near term. The company already reported last week, so earnings are out of the way. Just last week, we saw US oil rig counts increase for the first time since March. And this is a high frequency data point. It's updated every week. I shared the chart in our internal chat, and also, this data tends to be very smooth and non-volatile, because if we think about it logically, we don't really start up rigs 1 week only to shut them off the next week. So this is why the graph tends to be very smooth. So if oil rig numbers start to bottom and then finally start to increase, to me, this is a very reliable bullish leading signal. And as I said before, the reason why I like Schlumberger the most within this space is because currently this sector is still in the middle of a depression. So I think it's still too risky to be touching any of the smaller companies like Liberty or Transocean. Because if you look at the balance sheets and cash flows of a lot of these smaller players, they are quite frankly just one tail risk away from a bankruptcy. So risk tolerance wise, I don't want to go to bed and wake up the next day seeing my long positions gap down a lot on bankruptcy risk. But coming back to Schlumberger, the company has actually carried out a lot of cost cutting, and they're also laying off about a quarter of the workforce. And so this is going to put them in a prime position to accelerate their earnings once the oil drilling recovery is in full swing. In fact, Stifel just a couple days ago estimated that the company is going to make about $1 billion in EBITDA for Q3 and Q4, and as a result of these cost cuts. And they're raising their target price to $27 from 24. Personally, I think it can eventually go higher than that. And if I were to add to what Stifel was sharing, I would add that the company has resumed a lot of its international projects, and they've also just restarted their Ecuador operations following the pipeline disruptions there. And margins on those international fronts have remained in the high teens. In fact, margins haven't dropped at all on a year-over-year comparison. And while it's partly got to do with all the cost cuts, I think it's also because Schlumberger has a lot of pricing power. Because when rigs start up, it's not as if they're in any position to say no to whatever prices Schlumberger is quoting them. You could say there's some competition from Halliburton, but Halliburton has more of a domestic US shale focus, whereas Schlumberger has a higher international presence, particularly in the Middle East. So that's another point I would add to Stifel's note, which is the resilience of the international business and the high margins. Last thing I want to say is that the company has over $3.5 billion in cash as of last quarter, and they've managed to reduce their short-term debt from 1.2 billion to just over 600 million over the last couple months, and they're much better capitalized than all the smaller players. The impressive thing is that they generated $500 million in free cash flow, even with 150 of their facilities shut down. So management wasn't kidding when they repeatedly said in last week's conference call that they're transforming the company into one that generates higher returns going forward. So short term, I think the stock can get to $24, but I wouldn't be surprised if this eventually attacks the important resistance level of $30 over the course of the next 12 months on the back of earnings acceleration resulting from all this massive restructuring. So far, it's been a pretty muted reaction to the earnings because, first of all, the Q2 numbers weren't great. I mean, revenues were down 28% sequentially, and the company did take a very significant one-time charge for all their shakeups and layoffs. But going forward, I think when the company starts reporting in the next quarter, just how much better their margins and earnings power have become, I think it's going to surprise a lot of people.
Good stuff. This is the ultra contrarian bullish bet, but I have to agree that there is no question about it. We saw a similar kind of trend appear back in 2015 and 16 too, when the crude oil market crashed and oil prices fell from a high of $100 per barrel back then all the way down to $27, $26 per barrel, if I remember correctly. And then we had a bit of a basing formation, and then the rig cuts that we usually see, they trail the oil price, and it takes, and you're absolutely right, because that's what I learned back then too, where closing rig cuts and restarting them is not a turnkey solution. It takes a lot of time and process, and then when those rig cuts have basically been slashed to the bottom, and then the actual graph starts to stabilize at the time when there's an equilibrium reached between demand and supply of the oil prices, and then oil prices starts to climb, you basically start to get the benefit of both the rising oil prices as well as tight supply in the market at the time. And then the rig counts increases that follow, they don't follow fast enough, resulting in better and better margins and more top line growth to emerge. So this cycle is no different than how it typically plays out in the oil market after a crash. The only question is really the time part of it. I think there is a real argument to be made that the crude oil market has actually bottomed, Schlumberger, Halliburton, many of those, but it's to be seen whether we're going to continue to see the flattish price action for the 6 months or a year before the recovery could be seen, or is it something more quick, and we're going to start to see oil prices basically push higher. So the only thing that I will say is we need to monitor how the crude oil price basically reacts from here. We have seen a bit of a flattening price action after a sharp surge. Is this the new normal? Have we seen any cracks in crude oil price, and it could hurt these stocks again? But if we don't get it and crude oil and the rig count start to increase again, that's very, very bullish for all of them. So interesting contrarian bullish view. Jay.
Morning, everyone. So two stocks. Today, number one is COWN, COWN is the symbol. The company reported its Q2 earnings this morning. And just looking at the press release, if I can just quote some information here.
Nice, 10% rally. By the way, this is another pick from the third quarter Jaguar outlook. So this thing is going to open 10% higher. Sweet.
Yeah, and I would just say everything we wrote about in that write-up, it's playing out based on the press release. So record investment banking performance, strongest quarter on record, driven by capital markets activity in biotech and healthcare tools and diagnostics. Revenues for the month of June alone surpassed any quarter on record. And then M&A revenue was strong despite difficult economic backdrop, including a record single fee from the Nikola engagement. More specifically, the Nikola investment contributed $64.9 million to economic operating income, or $2.21 per share. So everything played out as it should have from the write-up and then into the earnings report. So yeah, stock is higher by. Yep.
This, for those who do not know, from the Jaguar third quarter outlook, which was issued in early July, on July 3rd, this was the trade recommendation at the time, serving up healthcare with a side of SPAC. And there's the bullish article we recommended buying. COWN common stock is $16.25. The full view was presented here. So well done. Nicely done. Good quarter.
Yep. And the second stock is Blackbaud. Ticker is BLBD. This is I'm sorry, hold on a second. That's the wrong ticker. Hold on. BLKB. Yeah, it's BLKB, sorry.
Yeah.
So this is a software company that serves the social good community. That includes nonprofit organizations, foundations, education institutions. It essentially helps increase donations, reduce fundraising costs. It improves communications with its constituents, and it helps manage their finances. Q2 earnings are scheduled for tomorrow after the close, and then the conference call will take place Thursday morning. And I kind of wanted to break this down into three parts. The first one being education, and I would label that as bullish. On the last earnings call, management mentioned that schools with Blackbaud cloud solutions had a much easier time making the transition to digital learning. So, given what we have encountered with COVID, this will be an area of strength, and it could even help them, with their pipeline, win some new customers along the way. The next part would be, I would label as neutral, and that's related to their nonprofit organizations. Those nonprofits have had to move to online fundraising events. So it'll be interesting to hear if, those attendees have changed their donation, their donations, essentially, how much are they giving to the company and whatnot, and whether or not we see in-person events coming online, or is it still going to be strictly online only?
Do you know the split between education and this nonprofit piece? Revenue split?
I don't. I was trying to look at it before the call, but I do not know at this time.
Okay. This is an interesting setup, I have to say, because we have seen recently, naturally, our favorite is Chegg, which is the best player in town, in my opinion, when it comes to the education piece, online education piece. But then we put out a bullish podcast in Pluralsight, another education piece, which we have currently in open position. And this had a huge rally yesterday, and I'm expecting a strong quarter and a breakout in this stock as well. Then we also have LRN, which is K12, which we also provided bullish view a couple of weeks ago in webinar, and the stock just took off. This is another education piece, and look at this monster rally that has happened since then. And now we're bringing up BLKB into the same mix. There is a good chance that this entire space is so hot, this thing is going to break out as well, and above 50, I want to say $57, $58 per share, this could really run because there's a lot of air pocket above this stock.
Yeah, and actually the last thing that I would point out, and the bearish piece, is that back in May, the company they encountered a ransomware attack.
Okay.
The problem is that they did not, the donors, the nonprofits, they didn't find out about it until this month. And what happened was, so there was a ransomware attack, and Blackbaud, they did pay the ransom. And the hackers supposedly said the information that we took has been destroyed. So, okay, you can kind of, I don't know if that's true or not, but one of the effects of that is going to be whether or not, because of the delay in telling nonprofit organizations and whatnot, are they going to drop their contract with Blackbaud? There's a report from nonprofitquarterly.org that says Human Rights Watch also found its information was compromised, and its report puts the number of colleges and universities affected at 160. HRW not only is informing every contact, but it is also ending its contract with Blackbaud. And then Robert W. Baird was out with a note yesterday saying the timing of this is not good because the company on their last earnings call said that half of their recurring revenue renewals are up in 2020, with the seasonal high for renewals and collections coming in the third quarter. So we're going to see if this data breach has caused a drop off in contracts.
Interesting info there. If it does impact, it looks like a transitory in nature, right? I mean, this kind of crisis basically are never lasting enough to have a material impact for future quarters, and there's a good chance the market may actually just simply look past it then rather than worrying about what happened in a one-time situation and now it's over. And I'm sure the management has taken mitigated action basically with this news already out. So it'd be interesting to watch this, but wonder if it's just transitory in nature. Okay, fantastic stuff. Avo?
All right, good morning, everyone. Just a couple of quick ones here. First one is looking at the one that I can never pronounce. Ichi, I think it is called. IQ is the ticker.
Yeah.
Saw rather call buying yesterday, August 22 strike. There were 20,000 transacted, but about 9,000 of which ended up in open interest. Not a lot of news. The last time we talked about this one was in early July when Tencent, well, actually a couple of weeks before that, Tencent was mulling about buying some more interest or higher stake in it. The only thing that I found about IQ was a news press release from yesterday morning, which I only strangely found it on my RBC platform, which sucks at news anyway. But they released a PVOD, Premium Video on Demand movie called Double World, some fantasy action movie, and it has garnered a lot of downloads, apparently 400 million views since July 24th. Now, honestly, I don't know if this is a huge number because it's in China and the population is 7 billion or 1 billion, but I think it is. And this might have some effect on it when they come out with earnings in August, early August, mid-August actually. So that's the first one that I'm looking at. And the second one was,
do you know what happened here when we had this massive spike on huge volume on top of it?
Yeah, I think that's when Tencent was set to be looking for interest. So it's come up and come down and closed that gap. So the next one is
just quickly, sorry.
Sure.
So Tencent may have been originally interested in IQ, but Tencent just did an acquisition yesterday. I'm trying to remember. Jay, do you remember on top of your head, what was that company that Tencent acquired yesterday? It will come to me. I have to look it up. But it may have been rumored to be IQ, but it probably wasn't. And maybe that may explain why IQ had a huge sell-off on July 23rd, because when people realized, nevertheless, that call action does excite me, and 400 million downloads. Wow.
Yeah.
So that's
I was
crazy.
just looking for 10 cent. What they acquired was search engine, SOKU,
Yes.
2.1
Yes,
billion.
that's the
So it's
one.
not the same field.
Okay. Next one.
Next one is, I had two to pick from. I don't know which one to go with. Let's go with this one, InMode. You talked about this on the 20th, so not too long ago. They've already pre-announced, but they do have earnings coming out. This looks to be, to me, September 40 synthetic long 2,000 contracts. I still like the company, and I think despite the pre-announcement, there should be a good quarter ahead.
Yeah, I actually was considering just in the last couple of days taking a new position in it and issuing an official trade idea, but now that you bring it up, I may actually go for it, because I continue to believe that this is just a remarkable company that has the ability, with its variable cost structure, to be able to continue to be very profitable in nature, despite top line pressured by some sorts of, COVID-related shutdowns and such. There are not many small cap stocks with a growth rate like this and free cash flow positive. That has always been my very, very strong opinion about this company. And you know what, frankly, the chart is making higher highs and higher lows now. The trend appears to be emerging from the March lows. It's not as V-shaped as some of the other stuff, but this is nonetheless positive. And maybe, just maybe, we are starting a new fresh leg higher from this point on that can carry the stock to about 38 to 39. The resistances, there are not much resistances here, all the way up into $41 per share. So it could go from 32 to 41. Interesting pick. And it might be worth taking a shot at it one more time this time. So I'll take a look at it more deeply. All right, great stuff, guys. Thank you, everybody, for joining. This is a little bit longer than normal. This is 31 minutes and counting now, but very constructive discussion. We'll see you in the chat room shortly.